I look at the direction of nominal and real interest rates. Gold loves falling nominal and real interest rates. And if I'm correct about the March 11th termination of the bank term funding program, and a couple of months after that, the reverse repo facility running dry, and that's the liquidity into the bond. That's liquidity for banks dries up. I wouldn't be surprised to see gold, at least initially, soar closer to $3,000 an ounce. And then depending on the intensity of the liquidity crisis, gold will take a hit. But then, if you put Powell on truth serum and you said, I'm giving you two choices. I'm going to offer you a deflationary depression where the banks go under, or intractable inflation. Which one will you choose? Which path will you decide? Mm-hmm. I think he chooses intractable inflation all the time.
Gold prices reached remarkable new levels this week, climbing over 5% to surpass the $2,150 mark. Michael Pento highlighted the strong performance of silver as well, which recently hit $2,430. The silver market experienced a 9% surge, outpacing gold, leading to a decrease in the gold to silver ratio from 92 to 89 within the last 5 trading sessions. Despite a stable atmosphere in the equity and FX sectors, with the American index gaining 1% over the week, precious metals continued their upward trajectory. Gold's advancement persisted even amid tepid market sentiment and limited investor engagement, a trend that Michael Pento sees as promising for future price directions. This bullish momentum wasn't just confined to traditional assets. Bitcoin also achieved new historic highs this week. Coming up, we have snippets from a recent interview with Michael Pento where he discusses the bullish breakout in gold prices and offers his predictions for gold in 2024. Before we dive into that, make sure to hit the like button, smash the subscribe button, and activate the notification bell, ensuring you stay ahead with our insightful content. Enjoy the viewing.
Because gold is real. It's real money, and it reveals the fallacy of government. I mean, gold, the beauty of gold is that its purchasing power never changes. So in theory, the gold should never change. I mean, in a real economy, the purchasing power never changes. So if you had a sound dollar or a sound currency, it would never change. It's a parking place for your wealth. Mm-hmm. And when it skyrockets like this, or not skyrocket, but when it hits new highs like this, it reveals the corruption of our leaders, and no one likes that. And it reveals the corruption of private and public banks. Okay, public and private banks, and they don't like that either. It's like egg on their face. Community bank is an idiosyncratic problem. It's not. It's emblematic of the whole over-leveraged, asset bubble-ridden deformation of this society brought about by 10 of the last 14 years having 0% interest rates. Mm-hmm. And money market funds that park their money at the Fed earning 5%. Mm-hmm. Tom, was $2.5 trillion at the peak. It's now $450 billion. According to my calculations, and it varies because it's not a complete mathematical formula. But it looks to me like May or June now is when that reverse repo facility becomes zero. But that again, so I can explain it. It's high-powered money. Mm-hmm. It's Fed credit. It's part of the monetary base. Why is it called high-powered money? Because this is the building blocks of all loans. All liquidity comes from the monetary base. It's physical coins and currency and Fed credit. Okay, you understand that, right? So Fed credit was being this money, this liquidity was being parked out of the financial system at the Federal Reserve, laying fallow, doing nothing but earning interest for a couple of years. And now that money is pouring into the economy. I look at the direction of nominal and real interest rates. Gold loves falling nominal and real interest rates. And if I'm correct about the March 11th termination of the bank term funding program, and a couple months after that, the reverse repo facility running dry, and that's the liquidity into the bond. That's liquidity for banks dries up. We wouldn't be surprised to see gold, at least initially, soar closer to $3,000 an ounce. And then depending on the intensity of the liquidity crisis, gold will take a hit. Mm-hmm. But then, if Powell's, if you put Powell on truth serum, and you said, I'm giving you two choices. I'm going to offer you a deflationary depression where the banks go under, or intractable inflation. Which one will you choose? Which path will you decide? Mm-hmm. I think he chooses intractable inflation all the time.
In the continuation of the show, Michael Pento explains how he's trading the market and has a message for all commodities holders. Watch the video to the end, hit the like button, smash the subscribe button, and activate the notification bell. And check our pinned comment for some massive sign-up bonuses. Enjoy the video.
An aura out there that the market's going to the moon and everything's great and is soft landing and puppy dogs and rainbows and sunshine forever and ever. But the salient problems that we have in the economy, which are primarily market manipulation to the extreme. So you think about, 10 out of the last 14 years, we've had interest rates below 1%. That's never before happened in the history of the world. Mm-hmm. And that has brought about massive amount of debt to be accumulated and a massive amount of asset bubbles. The asset bubbles are record high. You think about like corporate debt now. I'll give you one example. Corporate debt is now 49% of GDP. Now, corporate debt, I don't quote things just in nominal terms, Tom, because nominal terms, yeah, of course it's at a record high. Of course it's blowing through the roof. Of course it looks like a hockey stick, corporate debt. But what about, let's put that into the context of GDP, because that's what really matters, even though GDP is artificially inflated. 49%, it was 46% prior to the global financial crisis. That's corporate non-financial debt. You look at things like CLOs, you think about private credit. Let's just say private credit before the global financial crisis was $100 billion. It's now like 1.7 trillion, $1.8 trillion. And what is private credit? Private credit are loans from the shadow banking system, loans to corporations and businesses who can't access loans from a bank, and they can't tap the corporate bond market. We never heard about this. It's like a non-existent enterprise before the global financial crisis, and now it's like $1.7 trillion. So the problems of debt and asset bubbles, record high home prices relative to incomes, record high stock prices relative to GDP. So asset bubbles galore everywhere you look. Look at Bitcoin going to $69,000 a unit. I think it was up like $17,000 in 1 week. Mm-hmm. And what is it? It's a bunch of letters and numbers. You have a private key which contains electronic letters and numbers. Okay, you're going to give me $69,000 for that? It only has value in the context of a blockchain, and blockchains are a dime a dozen, and the blockchain has been usurped and co-opted by Wall Street, and now everybody knows who you are, and everybody knows who you are and what you own. So the whole purpose of Bitcoin is like what? I thought the purpose of Bitcoin, I know I'm going a little off. I thought the purpose of Bitcoin was I can do a transaction. If there's 21 million units of Bitcoin, it's very limited in supply, and I can perform a transaction that is immutable. It's decentralized, anonymous. Well, no. Wall Street took that baton, ran with it, and now everybody knows who you are. So what's the purpose? What's the utility? Mm-hmm. There is none, as far as I'm concerned. So there's your asset bubbles. I talked about asset bubbles. I talked about debt. So, okay, Michael, great. Parenthetically speaking, by the way, I am not short this market right now. Okay, so I haven't been short the market since 2022. So I run money for a living, my own money. It's in the same inflation, deflation, economic cycle process model that I created based on the second derivative of inflation and growth. So, am I saying that I'm negative right now? No, but I'm net long in the portfolio. But what's going to change? So I'm not some Cassandra saying short the market, it's going to all the time. No, you have to look at things like financial conditions, and you have to look at things like credit spreads to determine when you want to go short the market. Labor market, initial jobless claims is another thing I look at. It's telling me it's all these conditions put together telling me it's time to get nervous. It's time to be cautious. We have these asset bubbles. Well, what's going to change? You asked about the bank term funding program was launched on March 11, 2023. It didn't do much at all, right, Tom? It just bailed out the entire financial U.S. system. I mean, these banks, Silicon Valley Bank, there's 3 other banks that went under. And the problems in those banks haven't gone away. They've gotten worse.
What do you think of today's episode? Do you agree with Pento? Post in the comments section your price prediction for Bitcoin and silver for the end of 2024. And if you think this price breakout will continue. Thanks for your support, and watch this video right here because you'll love it. I see you on the other side.